Welcome back. Today we are talking about home ownership for the entrepreneur.
Oh, I'm so excited so I can get some answers for my clients.
Yes, I'm so excited too because it's a great topic to talk about, and there is so much information that goes into this, and there's a lot of things that people don't know, so I cannot wait to share it today.
Yes, awesome.
So is there any specific question that you want to dive into, or you want me to kind of like roll in and give you some of the overviews so far?
I have a scenario that I think will be very helpful to entrepreneurs.
Okay.
So I had a particular buyer that reached out wanting to purchase property, and we went through their question and answer.
Okay.
So the question was, what is your income? Let's figure out what your budget is, and before we go to the lender. Their income was a little over $100,000 per a year.
Okay.
And on their tax returns, it stated that they only made about $1,800 for the year.
Not too uncommon.
So, that posed a problem with them getting financing for their home. So we're kind of back at square one trying to figure out financing. And I would just like to talk through that and what that means for entrepreneurs who, yes, they make a good amount of money, but when you take a look at their tax returns,
you might write it off. Yes. Okay, so it's not uncommon for someone self-employed to make a certain number and then only claim a lot less, because as a self-employed borrower, or self-employed person, there are so many more expenses than like if you're W-2. And the fact that people write off a lot can cause a very common problem where then they can't get financing. So there's a couple things. The first thing, you want to make sure to get with a lender that's very familiar with self-employed. I cannot tell you how many times that I have been given a save the deal because it looked like they did not make enough money or claim enough money, and I got the deal done. Because there's a lot of things that you can add back that most people don't realize. I don't even look at the adjusted gross number. I don't even use that. So that's the first thing. Get with an experienced lender on self-employed. And then let's just say that that's exactly what I calculated. I would have calculated $1,800 as well, okay? Well, there's other options then also. Things like, I'm gonna look at and ask, are there any one-time expenses that are non-recurring? And you might be like, or the borrower might be like, oh my gosh, yes, like I literally had to buy this $200,000 machine that you like buy once in your lifetime. And so we document that, and now we have $200,000 more in income for that particular year. So we want to look for one-time expenses and things like that. Let's just say that there's, what's it called? Like I'm drawing a blank on what it is. Non-operating, NOI, NOC, something like that. It's like a non-operating loss carryover. And sometimes we can add those things back as well. So I remember one borrower that was denied 3 different places. His adjusted gross showed a negative $300,000.
Wow.
And I found income and I closed the loan.
Oh, wow.
I actually ended up closing 3 loans for him. But, you kind of have to know that. So let's just say that it's fine and you don't show anything, okay? Well, then you have an option for things like a 1099 loan, where maybe they're 1099 and we just look at the 1099 and we throw out the tax returns. Yes, you're gonna pay higher interest rates, but here's the thing. Think about it this way. I'm making this up, all right? I'm not quoting an interest rate. So I don't wanna hear from the regulators, okay? I'm not doing it, it's just an example. So let's just say that maybe your rate in the box might have been 6 1/4, and now you're doing a 1099 or a bank statement loan. We'll talk about that too. And now your rate's 8 1/4. Okay? Don't get your panties in a wad. It's fine. Would you rather pay 8 1/4 on a tax deductible interest rate, or maybe write a check to the IRS for 2 years for a total of $150,000? Let that one settle in for a second. So not even that big of a deal that the rate's higher. But let's say maybe they're not 1099, okay? Maybe they can do 1 year's bank statement or 2 years bank statements, where we literally throw out the tax returns and we take the bank statements and take averages and percentages of the deposits and approve them in that way. Now, those type of financing, they're not for low credit and they are not for low down payment. It's typically like a 650 credit score and typically around 10% or more down, but there's definitely options out there for a borrower in that particular situation.
Oh, that's awesome.
Good.
So if I have a particular buyer that contacts me in advance to say next year I'm hoping to purchase a home, what's the best advice that I can give them as they are preparing to complete their tax returns?
Well, what I would say is go ahead and try to get approved now. They might think it's a no, and maybe it is a no. But then the lender can say, well, it's a no because you need to pay this off, pay this down, show more here, show more there. Like, I literally have had people that have called me and I got their loan done, but then I advised them on like things their CPA missed, and they went back and filed amended and got like 20 grand back.
Oh, wow.
Like,
that's awesome.
You know, just because of things that the CPA might miss, or they might miss to tell the CPA, or vice versa. We're human, you know, mistakes get made. So it's different things like that. And we know to ask certain questions about, well, you said you do this, but you didn't claim that here. Or you said it's this type of work, but you didn't claim that there. Like, maybe it's right, maybe it's wrong, so on and so forth. But that way they can be advised on, hey, this might be what you need to work on in that particular situation. So I would ask for help now more than later.
Are there any common things that you see that have been missed for when they're filing taxes, or things that their CPA might have missed? Has there been any like common denominator or something we can advise them on in advance to make sure they're checking?
Yeah, some things would be business use of home. That's something that we can add back as partial income. There's sometimes that depreciation is missed, and that's a huge add back for us, which could be like an automobile or machinery, or, you know, different things like that. Real estate that's owned that has depreciation, things like that. Another common thing would be mileage. Like, there's ways that we can calculate and use those miles and add back income there. When it comes to like my truck drivers or my those grocery store delivery people or whatever, like that can add back like a lot of income there. So those are probably the top things that I see that could probably be looked at, adjusted, amended, or just planned for next year if it didn't work out for this year.
Okay. Well, that's awesome information. You've asked all of my preliminary or my top questions that I have. Is there any other advice that you would give?
Yeah, so never assume the answer is no. Like, definitely get with a lender, definitely try to get a pre-approval, definitely provide the tax returns, definitely point out things that are one-time, non-recurring type of expenses, and get that advice. Do not assume that you cannot get a loan because you're self-employed. Literally do not assume that. It could be as easy as, I have one last week, okay? She's 1099 from a foreign company. Like, let's just throw that in the mix, right? 1099 from a foreign company, self-employed, files a Schedule C. I calculated the income. I asked for a CPA letter. I got it. 48 hours, she's pre-approved by underwriting and shopping for a house. Like, it can be that fast, right? Yeah. But here's another example. 2 other borrowers, one for 3 weeks now and one for 3 months now. I'm still asking, can I get your tax returns? 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 Can you send me your tax returns? Like, so a lot of it has to do with the borrower and how serious they are in communicating with us and getting us the documentation. It doesn't mean that it's bad or that you won't get a loan, and maybe you will, maybe you won't, but you've got to take that first step and try for the pre-approval, because if it's a no for now, it could be a yes for later with a plan of things to work on.
That's awesome. One thing I want to say is make sure you do not allow fear to rule your decisions.
God, no.
So I'm so glad that you stated that. Try. You never know what the answer is going to be.
Right.
I appreciate all of your feedback and for answering my questions. I hope this session has been very beneficial to you. So don't hesitate. If homeownership is your dream, we want to see that realized, and we want to help you.
Yes, absolutely. So thank you so much for tuning in. And you can reach me at 985-300-LOAN or weeksteam.com. And how can they reach you?
I can be reached at 662-801-7096.
So thank you for tuning in, and we look forward to seeing you in the next one.
Bye-bye.